Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where I ramble and two other accountants speak intelligently about topics and of news, finance, taxes, accounting matters, or none of those things, just things that came up of interest to us. But what they always are topics that are discussed from the perspective of accountants. I'm Ty Carr, and with me today is Charlie Zygmunt.
Hi, everybody.
And Tammy Hess.
Hi, everyone.
What are we talking about today? Well, California public schools, are they failing? Some interesting data from the Journal of Accountancy on how finance leaders see themselves versus how others see them. The continuing epic of the worldwide corporate tax rate push. The Disney Florida tax bomb. Should a corporation have its own local government? And finally, Elon's big purchase. All right, well, let's kick it off with Charlie.
All right, so I've got an article we can talk about from the City Journal, and it's called California Public Schools Are Failing. And so the article is talking about with California's porous southern border, its soaring taxes, and ongoing flow of overbearing and occasionally bizarre regulations. And it gives the example of a law that targets cow flatulence as an example. It says state residents could use a break from bad news, but that doesn't look like it's going to be happening anytime soon because according to a recent report, California now leads the country in illiteracy. And apparently, in fact, 23.1% of Californians over age 15 cannot read this sentence, according to the article. A new poll from UC Berkeley's Institute of Governmental Studies reveals that just 35% of the state's voters gave public schools in their local district a grade of A or B. This is down from about 55% in 2011. And so at the other end of the spectrum, about 25% of people are now giving their local public schools a D or an F, which is up from about 15%. And so as a result of all this kind of distrust in the public school system, it looks like enrollment is sinking. Apparently, they lost about 23,000 students between 2018 and 2019. And then, it's just a lot of changes going on in that field. I think people are really kind of losing faith in those districts. And a lot of people who are leaving these districts are going to alternative approaches to school. Some are Catholic schools, for example, have seen a big uptick. Homeschooling has been a way that a lot of people have kind of changed their approach to education. And so I think there's just a lot of different ways that, it's kind of interesting because there's a lot of ways that these people could react to their lack of faith in the public school system. And so I guess I just want to get your guys' take on, do you think that this will become part of a bigger trend of people moving away from public education in not just California, but perhaps in other parts of the US as well? And will we start to see maybe more of a boom towards private schools or towards completely, other alternatives to school? What do you guys think?
Yes, I think for sure. But I think for larger macroeconomic reasons that aren't necessarily related to the quality issues, although, I guess I think they probably are all related, because I think income inequality, we're not doing enough to really change that. And so income inequality, I think, will continue to grow. I think we're going to continue to have kind of a minority of the country that has an enormous amount of wealth, and then another part of the country that doesn't. And I think that public schools are part of where that plays out, in the sense that you'll have a population that can only afford public schools, and then the enormously wealthy will all send their kids to private schools. It's already kind of happening, but I think more and more, I think that dynamic is at play here as well across the country. And so I think more people, if they have the economic means, we're gonna see kind of public school be seen as the place of last resort. I think because you're not in the tier that can afford for some other kind of option that costs time and or money or both. And that's unfortunate, because I remember growing up that wasn't really the case for public school when I was a kid. It was there were great public schools, and you might, if you were really into it, you might try to figure out which of the public schools you put your kids into, or that you might be wanting to go to of the various options you had, but it wasn't a choice of last resort across the board. And I don't know that it's that way today, but I think the economic trend is likely to push it that way in the future. So that's my prediction on it.
Yeah, I would agree. I think that is kind of where it's headed. I think where this really becomes a problem, though, and I'm hoping that maybe it will, something will change about it, because people who don't have the economic means and it is their last resort, and if they can't read a sentence in the article, like for your example, Charlie, or the article example, that's going to be a big problem, because what do people do if they can't afford the schooling, or if there's not a nearby private school that they can send their child to? So then if you're left to a big portion of people or children getting really not so great education. And then what does that do to the long run? So I know that this kind of happened or I can at least remember back in the time, and I don't know if it was like the 80s or 90s or something, where there was this big push about changing and reforming public schools to make it better, and having some stats, some of those things to try to encourage schools to be better and provide the better education for children. And I don't know if that's going to come soon to that, because the truth of the story is that not everyone can afford that option, or they don't have that option available, or there's not one nearby, like I said. So something has to change in order to provide education, which is really the founding, start for all of our children. So how do we fix that situation so that it's not a last resort in terms of choosing between the two, and giving somebody just better options for when they don't have a choice?
No, I think that's right. And I think, it's really interesting to look at too, because California is one of the higher, income states, I would say. And so if I was to imagine which state would have a lower literacy rate, I probably wouldn't have guessed that California would be the one. But then again, it also has a high population. And so perhaps that, ups the challenge there in terms of getting that whole population literate. But so we'll have to see how it goes. I just kind of want to get everybody's take on it. Do you have another article we can talk about, Tammy?
I do. So the Journal of Accountancy shared the results of a recent survey from Oracle NetSuite. The survey polled CFOs and non-finance executives on various topics. So surprisingly, or maybe not surprisingly, there are differences between the two groups. For example, CFOs tend to rate themselves higher in communicating with employees and stakeholders, 73 in a scale of 0 to 100, while other executives gave finance leaders a rating of 59. Both groups do agree, though, that CFOs have a high understanding of the business, rating them at 72. In terms of where CFOs improved, 47% of CFOs said that they had put their efforts in improving data analysis on the top of the skills that they have improved upon, while only 35% of non-finance executives believe that this is an area of the top 3 of improvements, but not at the top. So the article did give some insight as to where CFOs are spending their time. Roughly 2/3 of CFOs spend significant time in the following areas: 1, data analysis; 2, financial planning and analysis; 3, scenario planning; and 4, meeting with other executives, which seems about right. It does seem that CFOs are increasing the amount of collaborations and meetings with business managers, steadily growing from 30% in 20 to 51% in 22. They're also increasing their time with investors, creditors, or board members from 18 in 20 to 42% in 22. A couple of other interesting notes that the survey include was the fact that CFOs, for the most part, expect profits to be higher in 22 than in 21. They are more interested in cutting or controlling cost as a way to mitigate inflation compared to others in different roles. And the hours that CFOs worked in 22 is lower than that of the previous year, which they didn't explain why that is, but I thought that was an interesting little note. And then 51% of CFOs state that they enjoy developing scenario plans and dashboards for other executives than their other activities, such as reviewing month-end close processes and accuracy of the numbers. So I just kind of want to throw out there in terms of what you guys thought of this survey, and does anything in the survey surprise you?
Yeah, no, I mean, I think it's a good survey. I think that a lot of those findings ring true to me and just my experience of working with different professionals and whatnot. I will say one of the things that seems like maybe a takeaway from it is that it seems like all of the things that can't be automated are what's taking more of their time. So for example, you can't automate out the discussions with bankers or the collaboration with your coworkers and some of those things. And even the data analysis part is one of those things where you can take certain parts of that and help make it easier to run, but there's always going to be an interpretation kind of step there, and that makes it harder to automate. And so I think that a lot of what we're seeing in terms of how they spend their time is that they're putting it towards the things that they find more interesting and that they can't get anyone else to do, and everything else is getting handled by either a program or by a different department or that sort of a thing. And so that's maybe, yeah, that was my take on it. What do you think, Ty?
Yeah, I think that I think the part that stood out to me, but as making sense and just made me think about, do I like that or not, is the idea that they like creating dashboards for other executives, creating dashboards for other department leaders, and and I thought, well, why is it that people would like doing that? But I think that my guess is that it's the white space of it. It's the idea that you kind of can start with a blank slate and you can potentially and then create something that is meaningful to that particular leader. You can do it. It's something that you can collaborate with them on. It's not, it has more creativity associated with it than simply just, oh, we're going to do some reporting based on some rules and kind of thing, right? So I'm guessing, I'm just trying to put myself in that situation, say, why would I like doing that more? I think it would be the creative aspect of it, is the more open-ended aspect of it that I think would cause me to like doing that more than other activities.
Yeah, and I think also the fact of, looking, and we've talked about this as a group before too, is like if looking at the past, gives you a sense of the information and gives you a sense of the company, but the historical view of a business isn't what necessarily is as exciting as where could this company go, or where is it going, or what are the trends, or what are some of the challenges that as a group you can collaborate on in terms of solving and kind of fixing, or at least, mitigating some of the negative trends if you see them. And I think that's kind of the more exciting part, where finance and the CFO role is a partnership and really is helping the business versus just reporting on the business. And then that is a big kind of shift. It probably has been kind of evolving to that, kind of evolving to that path or that pathway, because as the years grow on, especially if you think about what's happened in 2020, where a lot of things were in flux and chaos, and people weren't sure what was going on, or there was needs to finance, and there was all these different things, where it became more of a collaboration effort and sharing amongst the different executives versus just one department solving it for another type of situation. So I'm excited to kind of see how that continues. And I think that having the CFO as a partnership and viewing them as a collaborator, more than just a reporter of the financial data, is always a great way to go. And I think, Ty, you have our next article.
Yeah, the next article that I have, which came from Thomson Reuters, and I think I'll just kind of share the topic with you all here. It was about it's kind of this ongoing epic. We've talked about it actually before in the podcast. The Biden administration has continued to push this idea of a global minimum tax for corporations, specifically large multinational corporations, and so this article was just talking about the continued push in that direction, the continued focus on trying to achieve that through legislation, through U.S. legislation. There is a worldwide group called the OECD that has these proposals for how you would achieve kind of a global tax regime that would be fair and would prevent companies from trying to arbitrage across borders. And so the Biden administration has grabbed onto this with Janet Yellen leading the charge to say, we want to get U.S. tax policy in line with as much of this as we can. And specifically, they're looking at the portion of this policy that would require or create, I should say, a global minimum tax on multinational corporations of at least 15%. So conceptually, what that would mean is that a company would not be able to escape paying at least 15% of their worldwide earnings in tax to some government. And presumably, if they're not paying it to some government that where they maybe have locations, maybe because we have a very jurisdictional based system right now where companies can claim that they're doing business in low tax jurisdictions and maybe avoid some US tax. This would change the US tax law such that they would presumably have to pay extra US tax to make up that difference that would bring them to the 15%. It wouldn't mean that they necessarily are paying a full 15% to the US. It would mean that between what they're paying to other countries and what they're paying to the US would get it up to 15%. But the idea here is not to cause companies to just pay nothing but US tax. The idea is to take away incentives to go shopping for a lower tax jurisdiction, to basically say, well, if if the only reason that your company is not operating in the US is because you could get a lower than 15% tax, this policy would eliminate that reason from a multinational company. That's the idea behind it. And so they tried to include this in the last legislation that did not go through. And so the reason this has come up is that they're now formulating new legislation in an attempt to get it to pass again. So I guess that leaves the question for the panel here. Do we think that this will fly? And do you think it should fly? Is it good policy?
I don't know that I think there's two very different questions there. One is, will it pass? That's a big question that I don't know. I guess I feel like there's too many people who have a lot of bias in this issue to see it pass without there being something pretty drastic getting it to actually happen. I think when you step away from it and when you're not the person that's involved in one of these companies and you're strictly just watching it from an outsider's perspective, it does seem ridiculous that a company would be able to avoid a lot of tax by basically artificially shifting some of their operational costs to a certain low tax jurisdiction. I think we all kind of agree that premise is probably not good for the world as a whole. But it's such a different thing to then get the world to actually buy into that and to, go through with it, because the people who are in power who would want this to not take place are those same people who would be most impacted by it. And so I think, should it pass? Yeah, I think there should be a global minimum tax, because no matter where you operate from, there's some level of use of the government system. And these attempts to move that profit to other jurisdictions are strictly, I shouldn't say strictly, but they're often there just artificially. And so, yeah, my perspective is make there be a global tax, but it just will never happen because too many people have too much money stopping that from happening. In my opinion, what do you think, Tammy?
Yeah, my thoughts are pretty similar with yours, Charlie. I do think, though, the last line of the article or the statement that was quoted was that individuals and families will benefit from the revenues this deal raises to pay for important social goods like childcare, healthcare, climate protection, and education. And I think that they, rather than ending with that, they probably should start with that and end with that, in terms of really getting the people to see why it's important for a global tax to be kind of initiated. So that, yeah, I mean, to Charlie's point, avoiding paying taxes in that sense legally, of course, but in terms of the way the current situation now and operating outside in a different country so that you can avoid the US tax just doesn't seem like that's not only fair, but also that it does shortchange some of the funds that we could use for those services that they quoted in the article. So I do think that it would be something that's worthwhile to do and to kind of implement. But I agree with Charlie. The likelihood of it passing is probably not so likely. What do you think, Ty?
Yeah, fair enough. I think that's right. It's hard to envision. It's hard to envision that kind of almost revolutionary tax change occurring in this political environment. So, but who knows? We'll see what happens here in the near term with Congress. And I'll pass the baton back over to Charlie here.
Okay, so yeah, kind of similarly, a little bit different of a topic, but similar vein was that in CNBC, there's an article called Florida Taxpayers Could Face a 1 Billion Disney Debt Bomb, in the article's words, not mine, if the special district status is revoked. And so what's going on is that, there's a big bill that's being proposed in the Senate, and they're calling it, the proponents to it are calling it the Don't Say Gay bill. And so what's happening is that that bill has led to a bunch of controversy in terms of how that whole area should be managed. And basically, Disney has been granted this place called the Reedy Creek Improvement District. And it was created back in 1967. And what it basically does is it gives Disney full regulatory control over the Disney World property. And so it lets them put in things like government services such as like fire protection, emergency services, water, and whatnot. And part of the way that this works is that they basically have Disney tax itself, and then it takes all those revenue dollars that it taxes itself and then uses them to fund those operations. And so they want to get rid of that. And there's some debate in the article about what the impact of getting rid of that special district would be. And so on the one hand, you have, let me get the names here right. So you have Scott Randolph, the tax collector for Orange County, saying that that district collects 105 million annually in general revenue that would go away if you were to dissolve that district. But on the other hand, we have Florida State Representative Randy Fine, who has helped kind of champion the bill. And he's saying that not only will that money not go away, it will actually benefit the people who are impacted by it, and that all of that tax revenue will be transferred to other local governments and could pay for those added services. And so there's kind of some debate about, basically whether those taxes will continue to be paid. And for me, it's interesting because, as somebody who works with a lot of much smaller businesses, this idea that there would be a specialized tax district is very foreign to me, right? A lot of businesses don't have that. And so when there's debate about whether it should or shouldn't happen, part of my take is well, if that area that they're operating in already had those services being offered, normal businesses just choose to operate there and be part of that tax system and part of those services. And that's really what happens. I realize that Disney is on a whole different scale, so it's a bit of a different question. But to me, the whole issue just seems a little bit silly. And it begs the question of should there be such a concept as large corporations being taxed or granted special tax districts? I don't know. What is your guys' take on that question? Should there be tax districts for corporations?
I mean, I think this is a unique scenario in the American geography, right? I mean, because of what Disney does there, right? They occupy a big chunk of land, and they are, running an amusement park and a resort, and it's, I guess it would be similar if large resort casinos or other amusement parks around the countries could have their own districts or whatever. But I think the scope and scale of what Disney is doing there is just so unique. I don't think there is anything else like that in the country. And so, should the solution that was crafted for that unique scenario even exist? I don't know. I mean, I think, in terms of the politicians and their discussion of it, I think government math is funny, right? It's I'm sure in terms of getting the revenue or the tax dollars from Disney, the politicians will figure out how to do that. It's more of a question of where does that money go after they tax it? Does it actually go somewhere that is beneficial? And you have to imagine that the appetite from local politicians to even do this was based on an idea that they could somehow get their hands on some of those dollars and use it in ways that wasn't already being used, right? So that, I think that's got to be the crux of it, the idea that they can somehow reaccount for the revenue dollars and have it applied in some different way that is better than the way it's currently been applied. And can they actually administrate that area effectively? Or was Disney actually better at administrating its own area, actually, as a practical matter? I mean, that's the thing, is that I guess I will weigh in on this. Should they be allowed to do this? Because I would say they have kind of an inherent incentive to maintain the safety and the look and everything else of the area that they would be that we're talking about, right? I mean, because it is the area that they occupy with that they want to draw people from all over the country, all over the world too, right? So, it's in their interest to make sure that it is administrated well, and so I think the incentives align well for Disney to administrate it. And it's hard to see that there are incentives for local politicians to administrate it any better. So I would say, yeah, they probably should have left Disney alone to do what they were already doing. But yeah.
Yeah, what this reminds me of, and I don't know if you guys are as familiar with it, but the Action Park in New Jersey, where they had, it was an amusement park, and they actually had a lot of safety issues, for example, and they were utilizing, they didn't have the special tax codes that Disney has right now, but what they found was that they were utilizing the EMTs and fire stations and all that, so those services so much because of the way that they were regulating their particular amusement park business. And it was really quite interesting where it's like shifting that into Disney's perspective. They have a large property, obviously, out there. To Ty's point, they have a lot of people coming in and out of there every day. And there's probably a lot of measures that need to be done for safety, for addressing safety concerns, whether it be for the fire, for ambulances, for all those kind of things. Whereas if you pulled it out and it was being funded by or serviced by the county or the property that they're in, would they be pulling the services way too much from the other people in that community and their county lines and all that kind of stuff? And or would they really calculate it right so that they're paying the right amount of tax for that service that they're providing? And so I guess to kind of put this all together, what I think is, due to the fact that's such a unique situation and due to the fact that there are really focused in terms of pools from those types of community services, it does make sense to me that they have their own and that they fund their own. Because I think that if they weren't to do that, that the push and pull from the neighboring land and shared services may be too much for that to handle. And I think that the other kind of tidbit in the article addressed this as well, but unwinding this is takes a lot of thought, because there's also debt associated with it that they reference that they have debt of, I don't know what it was, 1 billion or something in that, and bond debt that would have to probably be
7 billion. Yep.
Yeah, that would be shared back into the existing tax structure community, and that doesn't seem right either. So it's like maybe a little bit more research and determination of what the actual impacts and constraints that this would actually provide would be probably worthwhile to do before saying yes or no, I would think.
No, that makes sense. I mean, it's just tricky because it's like, you have businesses here that use security, for example, in places where the police could arguably do that role, and they're paying extra to go have third-party security fill a gap and so to me, it's like, should those businesses who buy third-party security services be granted special tax districts so that they can manage the collection and payments of those extra services that they require? And the other thing is, like, if you're a big business in a county, your tax structure for that county should drive the fact that that big business then pays in more tax revenue to compensate for the fact that it would pull more from that system. So in other words, the idea that they're really big makes sense that they would require more services, but that's supposed to be solved by their, proportionally huge tax bill that a big company would pay in that county. So I don't know if I'm maybe just oversimplifying it, but it's like, it seems like there are mechanisms in place to already solve that issue, but they just don't actually, play out that way in reality. So I don't know. Yeah. But yeah, do you have another article we can talk about, Cameron?
I do. So as a follow-up to our last episode, NBC News has reported that Twitter's board of directors unanimously agreed to Elon Musk's offer of $44 billion for the purchase of Twitter, and he has the financing in place to do that. So Elon posted on Twitter that he, and I quote, wants to make Twitter better than ever by enhancing the product with new features, making the algorithms open source to increase trust, defeating the spam bots, and authenticating all humans. So right now, I don't know if you guys saw there, but there are some funny tweets regarding Elon's next move, from next buying McDonald's and fixing the ice cream machines to buying Coca-Cola and putting the cocaine back in. There's a lot of tweets going on and comments about that, but they're most likely jokes, but who knows, what the world's richest man may do next. So there's probably not a lot for us to discuss on this. So I thought I would throw out a fun question. Is there a company that you would like to purchase just to fix something that bothers you about it? So for me, I'll go ahead and start. I would purchase my local grocery store and make their shelving units not so high. I can't even count the number of times I have to look around and ask someone to help me grab something from the top shelf. So that's what I would do, but what would you guys do?
I mean, I don't know that this is maybe appropriate for this podcast, but I'm a big watcher of the UFC, and I think that their model for how they collect revenue is completely broken and outdated. And I think that that is a business that, if I were in control of it, would revisit that whole approach. I don't know that it's the most, altruistic thing, but to me, I feel like that is a poorly ran business.
Yeah, I was thinking before this, I live a charmed life. So there's nothing I feel like I need to change out there because everything just works the way I'd like it to work. But then I was thinking, actually, it's probably the reverse is true, is that I'm just very cynical and I just assume nothing actually could change. And so I've just learned to accept it. And so, yeah, it's very hard for me to imagine the idea of, even I was trying to do this here. I'm like, trying to buy something to turn it into something that I wanted to do. It's like, but I wouldn't do that because I know it wouldn't be as profitable, or it wouldn't work well, or, I was trying to think, what, if I was just, I was thinking about, like, what do I care about? Well, I like to garden a lot, and Costco only has the gardening supplies seasonally. Like, the potting soil is only there during the spring, and I need potting soil later in the year. So if I own Costco, then I would make them have potting soil all year round. But the truth is, I wouldn't, because if I own Costco, I'd want to make a profit. And I know that the only reason they have potting soil only in the spring is because that's when everybody buys it. So just because I want it doesn't mean that's the way it actually is going to be profitable. So the truth about this question is, I'm not Elon. I wouldn't buy something just for the humanitarian. I want it to work better for all human beings, because, like, I would want to make money more than I would want it to work better for all human beings. I'm not as good of a person as Elon. If we believe that's where this is all coming from Elon.
Or maybe you are just a more thoughtful person because you also want to tie into something that you like to do, or what makes it better for you to tie it into making a profit. And I think in Elon's case, he doesn't have to necessarily turn something into a profit because he doesn't necessarily need it. So he really is, investing or changing things and buying things that makes him personally happy. And if it comes with the profit, yay. If it doesn't, what did he lose? Just a little bit of money for him, right? Although $44 billion is a lot of money. But yeah, I think that it's a very interesting kind of concept, Ty, of what you just said there, of really it's what's the need or what's the purpose of doing that, and what's the profit value, and that how do you sit on that decision? What's more important?
Well, and setting the profit aside for a moment, can we all agree that having the one platform, which is basically our repository for free speech in a way, right? Twitter is where everybody goes to voice their opinions. So should that platform be owned by the richest guy in the world? Let's just back out for that for a second.
There is a weird paradox in this whole thing, right? It's like Elon is saving society by making it more free, with more free speech, and yet it seems inherently antithetical to have it owned by the richest man, just one rich guy, that would be making it better free speech, right? So there is kind of there is a weird paradox here. But it's it being a public company owned by the public seems like it would make it more free speech. But we also know in the current environment that when things are subject to public scrutiny, you get more of the cancel culture effect as well, right? So, it's not an obvious, it is counterintuitive. I mean, it's like having the one guy own it is one way to battle cancel culture, but it's also, yeah, it's like what will actually drive the freest speech is not obvious. It seems, but it, I mean, it is and it isn't, right? I mean, I say it's not obvious, but then I feel like, well, that's dumb. Of course, the richest guy owning this platform is not going to drive free speech. But I listen to the Atlantic, the Atlantic magazine, very old liberal magazine, and they're open-minded about Elon buying this. So I'm like, well, geez, this world is getting weird. I don't know.
I think there's like a whole nother interesting thing here, which is like, we're all super sensitive to monopolies, right? We're always looking for like somebody being too monopolistic or whatever. And it's usually like geared around one topic, right? It's like, we don't want somebody to have a monopoly on cars. We don't want to have somebody have a monopoly on whatever. But there's like an interesting problem here, which I don't know that we necessarily have before, which is like Elon's owning kind of everything, right? He's involved in space. He's involved in cars. He's involved in PayPal. He's involved in Twitter now. I heard some articles that I'm sure will come up on this podcast later about him talking about buying Coke and all this sort of stuff. And so there's like a different type of monopoly, which is like when one individual is so involved in so many different places that his opinion becomes the monopolistic driver rather than the limitation of how many people are servicing whatever need it is. So I don't know. We'll have to see how that all plays out. But I just find that problem to be very interesting because without somebody branching into so many different fields, that problem doesn't exist. So,
yeah. Well, I'm sure there'll be more to come, and there'll also be obviously more Elon news or in terms of what he's doing next. And we have some time before the paper or the ink dries on the paper with all this purchase of Twitter, all that kind of stuff. So we'll continue to talk about it and continue to kind of bring it forth and see what we think about it.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for watching. Thanks for listening, and tune in again next week for more business updates from 3 accountants' perspectives. And if that's not enough for you, please check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. Thanks, everybody.
Bye,
everyone.